Peter McGuire joining us on the phone line, counting down to joining us live, pardon me, from Sydney this morning. Peter, counting down to the Fed. Good to have you in our studios this morning. A rate hike at this point is looking fairly unlikely, isn't it, Peter? But I think the bigger question is she likely to say anything that will surprise the market?
Well, good morning. Thanks for inviting me on the show. It's a damn hard question to answer. I'm not necessarily sure that she will say anything too outside the box, but I feel as though the way that the market is positioning itself for, over the 2016 calendar year, there's a lot of talk now of saying we're going to see 3 rate rises over the next, 10 or so months. So that's where the general consensus is. We're in a wait-and-see pattern as far as what happens in the next, 16, 18 hours as far as when Yellen comes to the market and discusses. And the markets are relatively flat over the, this period of time. So that's I think that's the reasoning, and that's the wake-up call. We're seeing relatively good inflation numbers in the States, and I think that could push the decision, later in the year.
Yeah. Peter, I also wanted to take your view on what do you see happening with the stock markets given the current commodity situation. I mean, usually commodity cycles take a long term to turn around, but there seems to be a lot of enthusiasm that in spite of China, something different is happening. How do you read that, and how do you see that impacting stocks?
Well, when you look at, if we take, I suppose, a wonderful example would be base metals and what's happened, of course, with the energy sector. There's no doubt when you look back and you'll reflect on the prices that we achieved in January as far as WTI and Brent, they were probably oversold. We've bounced strongly from those sort of price points, and we're now at that $36, $37 for WTI and so on. It's trading in very, very volatile ranges. We've got certainly some concern coming out as far as where Russia, Saudi Arabia and so on. They're saying we're going to hold production at these sort of levels. We've got the Iran situation. Then you've got, rig counts in the US. So at the present time, I think that the volatility will remain. We've seen strong uptick or up, as far as US dollar appreciation, so over the last, 10 to 12 months. So I think that as that factors into the market and all of those consensus and realisations, the Sensex has had a great month. It's bounced off those lows, and where the US equity market is, I think that they'll just consolidate at these sort of levels. So there's a lot of I think, awareness as far as interest rates and what's happening, but I'm not suggesting that the commodity markets are going to be, one-way traffic upwards from here. I think they'll stabilise and possibly level out.
Okay. So, Peter, we had the BOJ hold steady. We had the ECB, the market reaction to the ECB fairly quiet last week as well. We're watching it for the Fed. What else do you think are markets really looking for at this point, given that, perhaps at this point there's not too much room for central banks to do much more? Just for now, I'm saying not in the future. But, what do you feel are the triggers that markets are closely watching?
Well, they're very conscious as far as inflation data. They're certainly aware of, job stats and so on. The commodity cycle has been, in some fashion, devastating for oil producers, mining companies and so on. Headcount's been slashed globally. Also, the realisation, I was looking at a report from Deloitte's going back a couple of weeks now, they took a core sample of 500 companies across the globe, publicly traded on exchanges, and they're saying that in 2016, those companies that are involved in mining to oil to exploration and so on, greater than 36–37% will end up in bankruptcy this year. So that needs to be factored in, and I think central bankers are very conscious of the big picture and where the commodity route is, and whether we're going to see, over this next matter of months, I think it's just a consolidation phase, what really washes out from the market.
Peter, I just wanted to come back to 2 different commodities where we are seeing some significant move. First, if you happen to take a look at sugar, but sugar is actually a very volatile commodity. I was looking at it, that it's gone as high as 65 cents and as low as 1.25 cents, and somewhere around the 70s. And it's nothing to do with production. I mean, actually, I couldn't match the production with the price. What do you make out of the sugar's move at the moment that we're seeing?
Well, sugar is one of those classic cases. It's such a volatile market. You see huge breakouts. You see markets collapse. You see at other times of year, as far as, you know, natural, as far as Mother Nature and how that plays into the market. So you just see those explosive moves. Now, as far as the market at the present time, it's a hard one to really put your pinpoint on as far as where you're going to see the next breakout. It could whipsaw from these sort of price points. You could see a price collapse. You could see it advance. It's so difficult to actually ascertain and speculate on price movement because of the huge volatility that we've seen experienced. And that's not uncommon for commodity markets. Many times you'll see those breakouts either to the upside or the downside, and they just are, you know, tremendous trading opportunities, but also that whipsawing action you've got to be very careful with.
Okay, Peter, just one last call on India before we let you go today, and whether you see it as a sweet spot in the current environment or you see the cautious mood prevail overall.
Well, I think fundamentally, you know, you've had a good push up in the last, say, 4 to 5 weeks, up about 6%. I think the Sensex, it's been strong, recovering from those lows you experienced in January. I think that uptick will continue. I'm not suggesting you're going to see, you know, another 6% by this time next month, but I think it'll stabilise. I'm not expected to see those lows retouched or trade down to what you saw in January. So I think it's going to be a stronger period over the months ahead. And that's our forecast for, you know, that particular market.